Given some of the recent volatility that we've seen, I thought it was time to take a look at gold, particularly considering last year it couldn't break through those old all-time highs on the Russian invasion of Ukraine. We did see an important base built towards the end of last year. We've seen a strong bounce back since then, and we have seen a bit of volatility over the last week or so because of the latest US interest rate announcement and expectations about where rates might go. So I thought, let's take a look at this in a bit more detail. I'm David Jones, and as usual, I'll talk through some of the recent news that's driving the gold price. We'll take a look at some analysts' forecasts. We'll have a look at what could be important in the year ahead for gold to determine what sort of 2023 it's going to have. And then we'll jump on the platform, onto the charts, and take a look at things in a bit more detail from a trend support point of view, see where the short-term trades might be, see where the medium-term opportunity is. I do wonder if perhaps, have we already seen the best of the move for gold this year? I don't know. We'll have a look at the charts in a bit more detail and see what conclusions there are when it comes to targets for the rest of the year. Before we get into it, I did start a newsletter a few weeks ago, free of charge, comes out on a Saturday. It's a quick catch-up, what's been happening in markets in the week before. What market, hot market, am I watching in the week ahead? Some trading tips in there as well, designed to hopefully make you a better trader, and a bit of chat about the markets that I'm trading at the moment and my own trading performance. You can sign up by going to my website, jonesthemarkets.com. Scroll to the bottom of the page. On the website, there's a box in there. You get signed up, and you'll start receiving the newsletter from Saturday if you sign up before Saturday. I've put a link as well to the website and a link to the latest edition of the newsletter in the description of this video, so you can read it and see what sort of thing you can expect. So all free of charge, comes out every Saturday, and sign up on my website. Right, let's get into it and take a look at gold in a bit more detail. So last year, we did see gold rally on the Russian invasion of Ukraine. But after that, it had a bit of a disappointing year, I think. We saw the price of gold hit 2.5-year lows in September, November of last year. It spent a few months bouncing around 1650. We'll see it on the charts in a second when we look at those. But we've seen a really strong recovery since then. You know, we've seen the market push a good $250 higher since those lows. So we've seen a good move. It's had a good year so far. You know, we're only in, the second week of February, and the price of gold is up around 3% for the year to date, after, at the beginning of Feb, hitting its best levels since April 2022. So 2023 so far has been a good year for the price of gold. But I do wonder, given where it is now and where it's been, and looking at what happened last year, you know, when Russia invaded Ukraine last year, gold could not take out the all-time high from August 2020. So above 2,000 is the upside limited for gold. You know, what would need to happen this year to see gold out to fresh all-time highs? I can't quite see it myself, but more of that in a second. So I think there's a couple of things that might hold gold back. We are seeing stock market recoveries. The US, if you look at the S&P and the NASDAQ, is actually lagging behind some other markets. Take a look at how far, for example, the German DAX and the UK's FTSE 100 have come. But we are seeing US markets building a recovery. If we see more strength in US markets, I think it will pull more investors in, willing to take on more risk, and perhaps takes away the safe haven destination shine of gold. So I think that's something that could hold the price of gold back. Then, of course, it's the US dollar. As usual, I think the US dollar is going to be the big thing for gold this year. So we've seen a bit of volatility over the last week or so for gold. We had the US interest rate announcement last week. We had US unemployment data, the non-farm payrolls, last Friday. And this week, Jerome Powell, head of the Fed, has come out and said that if the employment market in the US stays strong, interest rates may peak higher than expected, later than expected. So this could lead to perhaps not runaway strength in the US dollar, but the dollar remaining relatively stable. And I think if we have a stable to slightly higher US dollar, that's something that would, I think, weigh on the price of gold. So I think the best hope for a significant gold rally from where we are now is further US dollar weakness. Let's see how it plays out. If the economy ends up being a lot better than expected and the central banks, like the Federal Reserve in the US, rein back their rate rise plans, that could put pressure on the US dollar, and that should lift the price of gold. Let's see. When it comes to some forecasts, I'm a bit skeptical about forecasts for the year ahead. I don't put that much value on them, but to give you an idea, I looked at a range of forecasts this morning. At the top end, the European bank ABN AMRO says $1,900 is its target for gold in 2023, and we have been there already. At the bottom end, the French bank Société Générale says that its target is more like $1,550 an ounce for gold. So that's like a 20% spread and a bit more in terms of targets for the price of gold at the end of 2023. Like I say, got to take them a bit with a pinch of salt. But interestingly, when I looked at these range of targets, no one was going really that much above $2,000 an ounce. Let's see what happens. As usual, enough chat. Let's jump onto the charts and take a look at the gold price in a bit more detail and see where the short-term opportunity is and where we might see it go for the rest of this year. So let's take a look at this gold price in a bit more detail. So this is going back, we've got the highs here from August 2020, just to show that move that we had last year, 2022, March 2022, did not quite take out the all-time high in gold, up around 2075, something like that. The highs set in August 2020. And then after we had that surge up, we saw this sizable decline in gold. Let's zoom things in. So we saw the price sell off, get as low as around 16.15, that sort of area, spend about 6 weeks hovering around there. Then we've seen this recovery that's happened since then. So we've seen a really good bounce back. We've seen almost a $300 bounce back up to into the beginning of February, up at 1960 near enough. And we have seen the market fall off since then on that, the interest rate decision and the perhaps the strength from the non-farm payrolls, bit of dollar strength we had. But we have seen, you can see the last few days, it is modestly trying to make a recovery. So where might we go next? Well, I do think in the short term, I'd still be a buyer of dips. Let's just zoom into the chart and have a look at what's been going on since November. So I've switched these over to 4-hour candles. So each candle represents 4 hours worth of trading. Let's forget about the RSI for now. We had this uptrend. It has fallen out of the uptrend over the last week or so. But for me, I do wonder, with it sort of stabilising around 1860, and in my book, there's a lot of support running from 1820, the old highs in December, and into the end of December, came back down to it in early Jan. So 1820 to 1850, I think is quite good short-term support. So in the short term, it wouldn't surprise me for it to have another run back up to those highs around 1960. Okay, so I think short term it could be an interesting move up to that sort of level. But let's go back and look at the dailies again. That's the shorter term trend I've drawn on, and it's fallen out of it. But as I often say on the live streams, I don't believe the first break of a trend. But I do wonder, on the upside, we do have this whole band now from 1950, let's call it, up to those highs in March of last year on the Russian invasion of Ukraine around 2070, where the price of gold really doesn't like it up here. So I do wonder if we do get another push up towards 1960 in the short term, really how much upside is there left? So unless we see a sizable US dollar slide this year, I'm struggling to see gold making much progress past the 2000 level. There will absolutely be opportunities, but I do think it might struggle up here. Looking at the RSI, there's not too much going on with the RSI. It has been knocked back, not surprisingly, with this weakness on the daily chart. We've seen the RSI, it hasn't gone oversold, but it has been knocked back to levels not seen since October. So again, it's suggesting the weakness we've seen over the last week has perhaps been overdone. So that does stack up to a more significant bounce back perhaps for the price of gold in the short term. It does support my short term view that perhaps we'll get something of a squeeze higher from here. But I do wonder if, yet again, if it starts to push near 2000, do we see some nerves for the price of gold? So let's see how it pans out. And I think for me, that 1820 to 1850 zone is quite an important support. I think if it does start breaking below there, that trend does look well and truly over. And I think the risk is, perhaps as the year goes on, assuming we haven't got any US dollar weakness, the risk is for a run back to the sort of mid-November levels from 1720 to around 1800, where it was towards the end of December. So short term, perhaps a pop higher. Medium term, it wouldn't surprise me if perhaps as the year went on, we saw the price come under some pressure if it does run back to have a look at 2000. But as ever, always an interesting market to watch, but really dependent, I think, on what happens with the US dollar. That's it for this update in gold. I hope you found it useful. If you're not subscribed, click on subscribe to stay notified of all the other content I put out there, including the regular live streams I do during the week. If you enjoyed the video, if you could click on the thumbs up, it all helps the YouTube algorithm and helps other people find the channel. Don't forget, the newsletter goes out on Saturday of this week as usual. Catch up with markets, hot market for the week ahead, some trading tips, and what markets am I trading. So if you go to the website, jonesthemarkets.com, go to the bottom of the page, you can put your email in and sign up and get that on a weekly basis on a Saturday morning, my time here in the UK. But that's it for the update in gold. So for now, good luck with your trading.